The most exciting beat in the global news narrative. Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. There is a ton to get through today. Of course, we had the big shakedown on Friday with precious metals, last trading day of the month. Enter the gold bug conspiracies, which sound pretty persuasive, to be perfectly honest. Who knows, but it seemed all a little too convenient. We can look at the story. As they say, we report, you decide. I have to say, I was just thinking to myself as I was looking at all the stories here of how glad I am that I'm not invested. And I say that as someone who does this show because it makes me feel like I have a bit more of an objective view. So if something goes down or where if I lose a bunch of money, let's say were I to be invested in silver, I might feel that extra, that is what's happened for sure. That all being said, you think of the technical analysts, it was overdone. And this is where the technical analysts, in my opinion, really shine. Because whether it was a manipulation or not, in a sense, it was rendered moot because if you look at the chart, it was time for that thing to come down. It had gone parabolic. One could even argue, classic rationalization of the long investor, I have been there many times, that this is good. This is healthy for the market. It had gone parabolic. We need a bit of a consolidation here. This is good as the price falls. Now, interestingly, here we are, Tuesday, February 3rd. We are having a big rebound. I mean, this is getting volatile. What are we at here? Just bring it up on the CNBC COMEX futures. April futures for gold up 6%. So up to $4,941.30. Not bad. Will we recapture 5,000 in short order? We could be at new highs by the end of the week, the way this market is going. And look at silver, up 12.3% at $86.52. So volatility is the order of the day. Whatever cause or rationale or explanation, whatever words you want to put on these numbers, the numbers are the numbers. After all these years, I'm not like some people who have spent decades, following these markets or financial markets. I'm about 2009 when I first started. Interestingly, I just love the gold bug narrative. As I told Cam Currie, who is the guest on today's podcast, we discuss currencies, gold, precious metal stocks, which he's still very excited about. As I told him, as I've mentioned on a previous show, the gold bugs have to be given a certain amount of credit for being right. Now, oftentimes, as Jeffrey Christian will point out, there tends to be a little bit of a, love, shall we say, of manipulation and conspiracy. So it always needs to be balanced out. However, the underlying gold bug thesis of fiat currency is now being, I don't know if I'd use the word parroted, but at least it's being echoed by the likes of Ray Dalio and Jeffrey Gundlach, who are now publicly, at least in Ray Dalio's case, voicing concern on fiat currency. In a sense, as I was saying to Cam Currie, it's like the gold bug narrative has gone mainstream. Now, that isn't the whole story, of course, because it is mixed, say, the run-up in silver with this GameStop kind of hype, Reddit, speculative frenzy that we're seeing. In a sense, it's the latest meme stock, so to speak, or meme investment in this case. So all very interesting. Now, there's a ton to get through here today. Let's just take a look at that drop and what is being said. Metals frenzy gets painful gut check just as YOLO crowd piles in. You only live once crowd piles in. This is Bloomberg News via mining.com, February 2nd, yesterday. The red-hot trade in metals and mining stocks is crumbling. Well, as of yesterday, but not as of today, just as droves of individual investors began piling in. Gold, silver, and copper prices plunged on Friday, triggered in part by a rebound in the U.S. dollar. The tumble, which halted a furious rally that lifted prices to all-time highs, came the day after retail traders funneled roughly $171 million into iShares Silver Trust, or SLV, which tracks the metal's price, figures from Vanda Research show. It was the largest one-day net inflow on record from that group. Now you wonder, because it was, I want to say 4 or 5 years ago when Reddit was trying to do a squeeze on the silver shorts, and you almost wonder if that's the story behind the story here. Why was everybody piling in at the top? Maybe that's how it works, or was this actually a kind of story behind the story, a war of sorts between, the Reddits and the banks? In this case, allegedly, JP Morgan. And we're going to look at one more tweet on that. Just to entertain it, it doesn't seem too crazy. Again, we report, you decide. We're looking at words, pixels on a screen here. And we are trying to determine, as a kind of Sherlock Holmes, what is going on. We're trying to triangulate. We're trying to use our understanding of human nature to try and come to an understanding that is as accurate as we possibly can be. But this is not mathematics. This is not quantitative. This is primarily qualitative interpretation and should always be considered that way. And therefore, there is no final answer, one could argue. So let's continue here. That fund, SLV, slumped the most since its 2006 debut on Friday, while the New York Stock Exchange ARCA Gold Miners Index saw its steepest drop since 2008. At one point I saw silver down 30%. Materials was the weakest sector in the S&P 500 index. The rout in precious metals continued Monday, with gold falling as much as 10%. At one point, silver plunged 16% before reversing some of the retreat. Now the worry is that increasing involvement of potentially fickle group, individuals chasing a quick gain, may spur even wilder swings, and I think that's a fair concern as we try and navigate the fog of war in the precious metals market. Quote, once a trade crosses from being a portfolio ballast into meme stock territory, volatility rises, said David Mazza, Chief Executive Officer at Roundhill Investments. Quote, everyone went all in quickly, so when the mood shifts, everyone moves at the same time, causing a negative and forceful feedback loop. It continues, President Donald Trump's nomination of Kevin Warsh, seen as a relatively hawkish choice as the next Federal Reserve Chair, was a catalyst for Friday's moves. On Friday, the greenback gained the most since May, gold fell 9%, and silver declined more than 20%. So that is the report. Again, that is Bloomberg via mining.com. And yes, you are seeing all of these accounts on X. Silver dump was done by JP Morgan, and I've got proof. So who knows? I just raised the fact that it is being considered out there. Again, as we try and put the pieces of the narrative puzzle together. Just another piece that didn't seem to fit into any other puzzle pieces yet, so we're keeping it on the side of our narrative puzzle. Another interesting headline following. JP Morgan sees gold price reaching $6,300 by year end. This by a staff writer at mining.com on February 2nd. JP Morgan is maintaining a bullish outlook on gold prices by setting an end-of-year price target of $6,300 an ounce amid a broader shift towards hard assets. In a note published late Sunday, the bank's analysts cited, quote, the ongoing diversification trend that has driven gold to record highs in recent weeks. Gold has further to run amid a still well-entrenched regime of real asset outperformance versus paper assets, they wrote. And it always recalls that great line by Jeffrey Christian, there is a bull market in real things. Indeed. So JP Morgan, the target of alleged manipulation, is now calling for 6,300. So what to make, who knows, all very interesting. Now, another fascinating story that happened last week, which actually dovetails beautifully into my presentation that I did at the Vancouver Resource Investment Conference. Here it is, repatriate the gold, German economists advise withdrawal from U.S. vaults. So this is an article from The Guardian. The Germans are getting concerned about all of the gold they're storing in the United States. And you have to ask yourself, it's like getting someone else to provide your security for you. It's just a liability. Like you should never, unless it's special circumstances, one would think government policy should never store the crown jewels, so to speak, the gold of the country, in another country. How they got convinced to do that, and it was, I think, a pretty common thing. I guess there was a lot of trust back then, but as I was mentioning in my presentation, the Athenian Empire symbolically was thought to have been formed from previously just being the Delian League, a defense league against the Persians reattacking anywhere in the Aegean, to the Athenian Empire once they moved the treasury from the neutral island of Delos to Athens, to the Acropolis. And their rationale to all of the contributing members of this defense league was, as long as we're taking care of the security, we should be able to do with this treasury what we see fit. So Germany would be well advised, should they even be able to get their gold back, to get it back. Turn the tables. Would the United States ever store their gold in Germany? It is unthinkable. Just a few paragraphs from the article. Germany is facing calls to withdraw its billions of euros worth of gold from U.S. vaults, spurred on by the shift in transatlantic relations and the unpredictability of Donald Trump. Germany holds the world's second biggest national gold reserves after the United States, of which approximately 164 billion euros worth, or 1,236 tons, is stored in New York. Emanuel Monk, a leading economist and former head of research at Germany's federal bank, the Bundesbank, called for the gold to be brought home, saying it was too risky for it to be kept in the U.S. under the current administration. I think it goes for any administration, to be perfectly blunt. Look at history. You know, the only reason Athens was able to move the gold from the neutral island of Delos is because they were made the administrators at Delos. So it's just like defense. If you are relying on someone else for your defense, you do not have sovereignty, which I think is the lesson that is being learnt here among NATO allies these days. Quote, given the current geopolitical situation, it seems risky to store so much gold in the United States, he told the financial newspaper Handelsblatt. In the interest of greater strategic independence from the U.S., the Bundesbank would therefore be well advised to consider repatriating the gold. Stefan Cornelius, the spokesperson for Friedrich Merz's coalition government, said recently that withdrawal of the gold reserves was not currently under consideration. And you know what? Because of the volatility, for lack of a better term, of the U.S. administration right now, maybe now's actually not the best time to ask. Maybe you actually wait for the next administration to ask for your gold back. You could make the argument. Because once you get a no, should that happen, then you have a precedent. Whereas if you ask among friendlier times, perhaps you have a better chance. Open question. Finally, we have Michael Jaeger, the head of the European Taxpayers Association, as well as the Association of German Taxpayers, who is also calling for the gold to be returned. Quote, Trump is unpredictable and he does everything to generate revenue. That's why our gold is no longer safe in the Fed's vaults, Jaeger told the Rheinische Post. Quote, what happens if the Greenland provocation continues? Good point. The risk is increasing that the German Bundesbank will no longer be able to access its gold. Therefore, it should repatriate its reserves. And finally, so the AfD, the Alternative for Deutschland, is also calling for the return of the gold, but also the Green Party. Catherine Beck, the finance spokesperson for the opposition Greens in the Bundestag, has also spoken out in favor of relocating the gold bars, calling them, quote, an important anchor of stability and trust, which must not become pawns in geopolitical disputes. Another huge story. Now, this is kind of a weird one. This came out on February 1st, which is Saturday, on the Financial Times. Quite a headline you're going to hear from the FT. Xi Jinping calls for China's renminbi to attain global reserve currency status. Now, if that's not a head-turning headline, I don't know what is. Latest commentary details ambitions for, quote, powerful currency to play a greater role in trade and forex. Now, this is something I've been discussing here in the last few months. As I mentioned 3 to 4 weeks ago, if you are able to print money and get real things for it, as China is increasingly trying to do with their dispute with BHP and Vale over some forms of iron ore and whether Chinese currency can be used, and this seems to be the explanation as to why there is continuing to be a dispute between the Association of Iron Ore Importers in China, CMRG, I believe they're called, and BHP and Vale. So it's not just Australia, but the Australian Prime Minister was voicing his concern over the matter. And the reason we keep hearing, this has been going on for months, and the reason we keep hearing is because China wants to pay in their own currency. And we're also seeing apparent deals with Saudi Arabia for oil using the Chinese currency. And increasingly, we're seeing a kind of development, we might say, of their metals markets, incredible volumes, which seems to be impacting the metals. As we've seen with the rise in zinc and tin, to name a couple of examples, you could argue it's happening with copper, as well as the precious metals, I mean, it's an open question how much China's impact is influencing these markets. But all to say, there seems to be a push by Beijing to pay for more and more of its commodities in its currency. And as I was saying, it may not be a reserve currency in theory, but in practice, I mean, if you can print money and buy real things, particularly, as that senator beautifully put it, particularly the building blocks of the supply chain, such as metal and energy, if you can pay for that with your own currency that can be printed, perhaps economists might not call that a reserve currency in theory. But in practice, I mean, what is the difference? So, in a sense, if you listen to this show, this is nothing that should shock us. It's more confirmation of a narrative that we've seen building through China trying to buy, raw materials with their own currency. Another interesting story, this is the Wall Street Journal, the hottest commodity in the mining business, American generals. And this is by John Emont on February 1st. Companies that mine critical minerals are looking like defense contractors these days. One sign, many are hiring retired generals. Western miners have added at least a dozen former American generals, colonels, and admirals to boards or to senior leadership roles over the past year, hoping to tap the billions of dollars the Department of Defense is shelling out to rebuild domestic supply chains after China cut the U.S. off for much of last year. The retired former generals guide the geologists and finance executives who run mining companies through the less familiar terrain of Washington. They make introduction to defense companies, scrutinize business deals with foreign partners to make sure they won't raise flags with the Pentagon, and give advice about whom to meet on Capitol Hill. Very interesting. So, retired generals appearing on boards of mining companies. And we have a quote from Tony Sage, chief executive of Critical Minerals. Quote, "The guys that have worked in the Pentagon before, they know how all this works. I'm a miner. I don't know how this works." So the gaps are being bridged between the mining industry and defense contractors. All very interesting. I suppose it was inevitable. We could all see this coming, but it's still another thing to see it happen. Continuing on, Pentagon strikes deal with Canada's 5N+. This is Bloomberg News via mining.com. The U.S. Department of Defense made an $18 million investment in Canada's 5N+ to help the company expand refining capacity for germanium metal, which is used in night vision systems and other applications. Quote, "Our warfighters depend on next-generation optics for surveillance, reconnaissance, and targeting, and germanium is a key element in their manufacture," Mike Cananazzi, a Pentagon official, said in a statement announcing the deal. Continuing on, America returns to the Sahel as top U.S. official heads to Mali for reset talks. The United States is taking cautious steps to re-engage Mali's military-led government, signaling a pragmatic shift in Washington's Africa policy as geopolitical competition in the Sahel intensifies. So interesting, the military junta there getting meetings with Washington officials, and it seems to be all about metals and mining. This is africa.businessinsider.com. And another headline, rebel leaders denounce U.S. DRC minerals deal 1 year after Goma's fall. And here is the summary from Reuters on January 28th. Rebel leader criticizes U.S. DRC minerals deal as unconstitutional. Most key minerals in East lie in areas held by rebels. So the rebel leaders have come out and are criticizing the DRC United States deal on critical minerals. And this is January 28th. On January 30th, there is a gigantic collapse in a mine in East Congo that is overseen by the M23 rebels. More than 200 killed, perhaps as many as 400 feared dead in DRC Coltan mine collapse, officials say. So here is the Reuters article. More than 200 people were killed this week in a collapse at the Rubaya Coltan mine in Eastern Democratic Republic of Congo. Lumbaba Kamberi Muyiza, spokesperson for the rebel-appointed governor of the province where the mine is located, told Reuters on Friday. Rubaya produces around 15% of the world's coltan, which is processed into tantalum, a heat-resistant metal that is in high demand by makers of mobile phones, computers, aerospace components, and gas turbines. The site, where locals dig manually for a few dollars per day, has been under the control of the AFC M23 rebel group since 2024. The collapse occurred on Wednesday, and the precise toll was still unclear as of Friday evening. Quote, more than 200 people were victims of this landslide, including minors, children, and market women. Some people were rescued just in time and have serious injuries, Muiza said, adding that about 20 injured people were being treated in health facilities. Quote, we are in the rainy season, the ground is fragile. It was the ground that gave way while the victims were in the hole. Now, on February 2nd, Colin McClelland at the Northern Miner is now saying up to 400 people are feared dead after heavy rains triggered landslides at an informal mining site in the Eastern Democratic Republic of Congo. Scrolling down, in a statement over the weekend, Congo's government said the site operates, quote, in a complete absence of safety standards and accused the Rwanda-backed M23 militia, which has controlled Rubaya since 2024, of illegally exploiting the mines and sharply increasing production over the past year. It described the operation as pillage and said the deaths could amount to a war crime under international law. So, a massive catastrophe in the rebel-held areas in the Eastern Democratic Republic of Congo. So a sad day for however many people passed in those unsafe mining conditions. So a prayer for those victims. Coming up this episode, we have Cam Currie. We're going to discuss the precious metals markets, all of the volatility, the larger macro factors at work, and where Cam is thinking to go next in this precious metals market. It's a wonderful interview. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner and on Facebook, LinkedIn, and YouTube, where we also host these podcasts and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to the news. Turning to the website, Trump launches $12 billion minerals vault to cut reliance on China. It's by an editor at mining.com. U.S. President Donald Trump is preparing to launch a strategic stockpile of critical minerals backed by $12 billion, aiming to protect manufacturers from supply disruptions as the U.S. accelerates efforts to reduce dependence on Chinese metals. One wonders if this could backfire. The White House confirmed on Monday the start of Project Vault, which would combine $1.67 billion in private capital with a $10 billion loan from the U.S. Export-Import Bank to buy and store minerals for automakers, technology companies, and other industrial users. The model mirrors the country's emergency oil reserve, but focuses instead on materials such as gallium and cobalt used in products ranging from smartphones to jet engines. The project spans the automotive, aerospace, and energy sectors and underscores Trump's broader push to rewire U.S. supply chains away from China, the world's dominant producer and processor of critical minerals. More than a dozen companies have reportedly signed on, including General Motors, Stellantis, Boeing, Corning, GE, Vernova, and Alphabet's Google. Commodities traders Hardtree Partners, Traxys North America, Mercuria Energy will handle purchases to fill the stockpile. Quote, Project Vault is a clear signal that U.S. critical mineral policy has moved to deployment. U.S. Critical Minerals Chairman Harvey Kaye told mining.com. It says that secure supplies of rare earths and heavy minerals like gallium are now treated as strategic infrastructure for our economy and defense industrial base to establish U.S. sovereignty. Kaye noted that for companies like U.S. Critical Materials, it confirms that high-grade domestic supply is no longer optional. Trump is scheduled to meet Monday with GM Chief Executive Officer Mary Barra and mining entrepreneur Robert Friedland, representing both consumers and producers of critical minerals. While the U.S. already maintains a national stockpile for defense purposes, it lacks a comparable reserve for civilian industry. The gap has taken on urgency as the Pentagon ramps up its own accelerated stockpiling campaign, targeting up to $1 billion in mineral acquisitions in the near term. I mean, one wonders, these aren't huge markets, so you start pouring in billions of dollars. Even if it's $1 or $2 billion into the copper market, this is going to start to move the price, and one wonders how much of the price has been moved by government stockpiling. The drive is supported by Trump's One Big Beautiful Bill Act, which allocates $7.5 billion for critical minerals, including $2 billion to expand the national stockpile by 2027, $5 billion for supply chain investments, and $500 million for a Pentagon credit program to encourage private projects. The administration has also taken the unusual step of investing directly in domestic mining companies to boost U.S. rare earths production and processing. Last month, a bipartisan group of U.S. lawmakers introduced a bill to create a $2.5 billion stockpile of critical minerals, a move aimed at stabilizing market prices and encouraging domestic mining and refining. Senior administration officials told Bloomberg News Project Vault was oversubscribed, citing investor confidence in the credit quality of participating manufacturers, their long-term purchase commitments, and the backing of the U.S. Export Credit Agency. Under the plan, companies can draw down their allotted materials as long as they replenish them, with full access permitted during major supply disruptions. Manufacturers that commit to buying set quantities at fixed prices will also agree to repurchase the same amounts at the same cost in the future, a structure the administration says will help stabilize prices and dampen market volatility. Bloomberg News was the first to report the creation of the Critical Minerals Strategic Reserve. I was talking to Jay Martin in the fall. We were both sharing a kind of skepticism towards the price floors as a strategy. A very interesting headline from Reuters on January 29th via mining.com. U.S. moves away from critical mineral price floors. The Trump administration is stepping back from plans to guarantee a minimum price for U.S. critical minerals projects, a tacit acknowledgement of a lack of congressional funding and the complexity of setting market pricing, multiple sources told Reuters. The shift, which comes as a U.S. Senate committee reviews a price floor extended to MP materials last year, marks a reversal from commitments made to industry and could set Washington apart from G7 partners discussing some form of joint price support or related measures to bolster production of critical minerals used in electric vehicles, semiconductors, defense systems, and consumer electronics. At a closed-door meeting this month hosted by a Washington think tank, two senior Trump officials told U.S. minerals executives that their projects would need to prove their financial independence without government price support, three attendees told Reuters. Quote, "We're not here to prop you guys up," Audrey Robertson, Assistant Secretary of the U.S. Department of Energy and head of its Office of Critical Minerals and Energy Innovation, told the executives, according to this account. Quote, "Don't come to us expecting that." End quote. While the administration is moving away from negotiating individual price floors with companies, a U.S. official told Reuters on Thursday it may use its new powers under Section 232 tariffs to impose market-wide price floors on certain minerals, an approach that could serve a similar purpose. So, following this, on January 30th, we have a report from Reuters via mining.com. Australia says U.S. price floor back down won't derail its critical minerals strategy. Australia on Friday said it would support its critical mineral supply chains after the U.S. stepped back from plans to guarantee a minimum price for such projects. Shares of Australia's rare earth miners fell sharply on Thursday after Reuters reported on the Trump administration's retreat. And we have a quote from Australia Resources Minister Madeleine King, who told Sky News on Friday, quote, "That won't stop Australia from pursuing our Critical Minerals Strategic Reserve program to make sure Australia has access to the resources it needs to build a future made in Australia. We know from what we've seen in reports, and we will let that play out, the U.S. has introduced a price floor for one particular project, I believe that's MP Materials, and that's the only one it has done it for, and that was a game changer." End quote. Australia has been positioning itself as a critical minerals alternative to China, the world's biggest producer, for use in the automotive and defense sectors. It has said it would establish a $840 million strategic reserve of minerals that it believes is vulnerable to supply disruption. The stockpile, which will prioritize antimony, gallium, and rare earth elements, is expected to be ready by the second half of 2026. So it seems like buying is going on as we speak. And one has to ask, how much of this bull market is being propelled by government purchases and investment? How much? Continuing on. Japan boosts deep-sea mining plan to cut rare earth reliance. It's Bloomberg News via mining.com. Japan is accelerating a decade-old plan to extract rare earths from the deep seabed, an ambitious initiative given extra impetus by the country's drive to cut reliance on Chinese supply. You know, I saw a story, I think it was in the Global Times, that was basically calling this all cosmetic. It's great if you can get some rare earths from the bottom of the sea, that's great, but you still need to process them. Scrolling down, quote, "It's about economic security," said Soichi Ishii, Program Director for Japan's National Platform for Innovative Ocean Developments. Quote, "The country needs to secure a supply chain of rare earths However expensive they may be, the industry needs them. Interesting development. Continuing on, tungsten price rises to record highs as export curbs turn up supply heat. This is Reuters via mining.com. I mean, any one of these stories could be the headline of a regular news beat. You are in the most exciting news beat in the global news narrative. I declare again. Tungsten prices have rocketed to record highs in January, fueled by tightening inventory, Chinese export controls, and industrial demand, leaving consumers scrambling for supplies in an already constricted market. Prices of ammonium paratungstate, used to make tungsten metal, were trading at $1,125 per metric ton unit in China, a record price according to traders. Prices in Rotterdam hit an all-time high of around $1,100. Prices are widely expected to climb further in the coming weeks. I'm back to my question. Is this government buying? Tungsten is a critical industrial metal prized for its hardness with the highest melting point of any metal. And I've pointed out in recent shows the importance of hardness in metal when dealing in military applications. So, the highest melting point of any metal is tungsten, interestingly. And we have a quote from a London-based trader who said in an email to Reuters, quote, "There are a lot of reasons for tungsten to go up. Market is tight. There is a lot of demand from defense, aerospace, IGT, and all other sectors. There are problems with supply, lower ore grades, and other issues. And on top of that, there are issues with exports from China." End quote. China, which dominates global tungsten mining and processing, unveiled export controls in February 2025, requiring exporters to get government permits before shipping their materials. So tungsten getting some attention. Continuing on, China's metals mania sends copper price soaring past $14,500 a ton. It's Bloomberg News via mining.com on January 29th. Copper surged by the most in more than 16 years after a wave of buying from Chinese investors triggered one of the most dramatic moves in the market's history. Prices gained as much as 11% to trade above $14,500 a ton for the first time ever, before a sharp retracement on Thursday afternoon. The industrial metal, which is used in almost every electrical application, has risen about 21% since the start of December, firing up copper bulls who have long predicted a surge in prices. Quote, "You wait a lifetime for markets like this," said Mark Thompson, a mining executive and former trader at Trafigura Group with 3 decades of experience in the copper market. Quote, "We are one supply disruption away from $20,000. Chinese investors are piling into metals as they ride a powerful wave of momentum that has lifted everything from tin to silver to record highs. The initial surge in copper took place at a time of day when Chinese traders dominate flows, with prices on the London Metal Exchange rising more than 5% in less than an hour, starting at 2:30 a.m. London time." Now, this is an interesting question, because Jeffrey Christian has mentioned there are players, say, working in the Chinese market that aren't necessarily Chinese. So, just because moves are being made at 2:30 a.m. London time, perhaps on a Chinese exchange, doesn't necessarily mean they're Chinese actors. Scrolling down, the speculative frenzy has driven a surge in volumes on the Shanghai Futures Exchange, China's top commodity trading platform. January was already the busiest month on record for the Shanghai Futures Exchange 6 base metals as of last week, and copper racked up its second biggest daily trading volumes ever on Thursday. Continuing on, Eldorado to buy foreign mining for $2.8 billion amid copper push. This by Cecilia Jamasmi at mining.com. Eldorado Gold has agreed to buy fellow Canadian miner Foran Mining in a transaction that values the copper-focused producer at about $2.8 billion. The deal brings Eldorado's Skouries gold copper project in Greece and Foran's McIlvenna Bay project in Saskatchewan into one portfolio, both targeted for commercial production in mid-2026. Eldorado said the enlarged group could produce about 900,000 gold equivalent ounces in 2027. So a little M&A. Continuing on, Niger attack endangered uranium stockpile near main airport. So we continue to follow this uranium in Niger story. Again, I just think of the Iraq War, where uranium yellowcake was pretty much seen as the main decisive development in that narrative, which greenlit that war. And here we have a uranium stockpile in Niger, and it's getting next to no coverage. Credit to Bloomberg News, who is covering the story via mining.com. Unidentified attackers who staged an assault on Niger's capital came dangerously close to a stockpile of uranium removed from French company Orano S.A.'s mine. Heavy gunfire and explosions erupted near Niamey Diori Hamani International Airport early Thursday. The facility is adjacent to an Air Force base where Agence France-Presse reported the concentrated uranium powder known as yellow cake was stored earlier this month. So we're talking about yellow cake, the same thing as was being discussed in 2003. Incredible. We're talking about yellow cake uranium in Niger. Where are the news stories? At least 20 attackers died in the assault, with 11 others wounded and captured. Defense Minister Salifou Modi said in a statement read on state television. 4 members of Niger's security forces were injured, he said. Islamic State claimed responsibility for the attack via Amaq News Agency, a media outlet linked to the group. This is terrifying. Niger's military leadership took over Orano Somer mine in 2024 after accusing the French nuclear company of planning to halt operations and sell its shares without following proper procedures. So a worrying story there in Niger continues to develop. Another headline, Mozambique's president opens Chinese-owned graphite processing plant. This is Reuters via mining.com. Mozambique's president, Daniel Chapo, opened a 200,000 metric ton per year graphite processing plant at a Chinese-owned mine on Friday as the Southeast African country boosts output of the battery mineral. Annual global mine graphite production is 1.6 million metric tons, the United States Geological Survey estimates, and Mozambique is one of the world's top producers of the mineral, which is an excellent conductor of heat and electricity and is used in batteries for electric vehicles and mobile phones. And this is going to make 200,000 metric tons per year. So that is quite something. China has the world's largest graphite reserves and dominates its mining and processing as well. And President Daniel Chapo said, quote, "Today we are entering the world's industrial map. We are no longer a supplier of raw materials, but a producer, processor, and exporter of materials." Chinese company DH Mining, which started work on the graphite mine in Nipepe in 2014, said it had invested $200 million on mining and processing facilities. Very interesting development there. Another headline, Algeria opens 600-mile railway to tap vast iron ore deposit. This is Bloomberg News via mining.com. Algerian President Abdelmajid Tebboune inaugurated a 950-kilometer railway built in collaboration with China that's key to exploiting vast iron ore deposits in a bid to diversify the OPEC members' economy. The step gives the green light for the first shipments of ore from the Gera Jabilat mine in the western desert near the Moroccan border, a project mooted for decades. Faral, a subsidiary of Algeria's state miner Sonarim, and China's Sino Steel are among companies involved in the broader project. The new line, built by Algerian state firms and China Rail Construction Corporation, connects the distant mine with the cities of Tindouf and Bashar. From there, an existing railway links to the Mediterranean coast and the city of Oran, where Turkey's Tosyali Holding operates a steel complex. The official opening, aired live Sunday on Algerian state TV, comes as the North African nation that's a major gas supplier to Europe focuses on developing its mining industry. So another railway in Africa, one that you don't hear much about. This is in Algeria. And another headline, India to unveil incentives for lithium and nickel processing. That is Reuters, and you can read the whole story on mining.com. Another story, EU mulls ban on Russian copper and platinum in new sanctions. And that is Bloomberg News via mining.com on February 2nd. Another headline, uranium entering multi-year structural bull market, according to a report from Tenny's Capital. And they're saying the global uranium market is entering, quote, a tipping point. So you can read all about that story on mining.com. Those are your news stories. Now, let's take a look at metal prices. Turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.29%. That is 0.07% higher than last week. The UK 10-year gilt is yielding 4.51%. That is 0.01% lower than last week. Italy's 10-year bond is yielding 3.5%. That is 0.03% higher than last week. France's 10-year bond is yielding 3.47%. That is 0.04% higher than last week. The German 10-year Bund is yielding 2.89%. That is 0.02% higher than last week. And Japan's 10-year bond is yielding 2.26%. That is 0.03% lower than last week. And China's 10-year bond is yielding 1.81%. That is 0.01% higher than last week. So a bit of a mixed bag in bonds, with perhaps the U.S. 10-year at 4.29% standing out the most. But the Japanese 10-year bond continues to consolidate at higher levels. Turning to precious metals, gold is trading at $4,922.50 per ounce. That is $160 lower than last week, so on the weekly, not doing too bad at all. Interestingly, silver is trading at $85.60 per ounce. That is $22 lower than last week, so big drop in silver. Platinum is trading at $2,126.40 per ounce. That is $651 lower than last week, so massive drop in platinum. And palladium is trading at $1,692 even. That is $428 lower than last week, so maybe 23% lower on the week. Turning to industrial metals, copper is trading at $5.81 per pound. That is 16 cents lower than last week, but still just hovering below $6 there. Iron ore is trading at $105.62 per metric ton. That is 72 cents lower than last week. Aluminum is trading at $1.39 per pound. That is 6 cents lower than last week. Lead is trading at 90 cents per pound. That is 3 cents lower than last week. Nickel is also lower at $7.72 per pound. That is 75 cents lower than last week, so about 10% down. Tin is trading at $23.57 per pound. That is $2.20 lower than last week, but still quite elevated. Cobalt is unchanged at $25.53 per pound. Lithium is trading at $23.11 per kilogram. That is $3 lower than last week. Uranium is higher at $99.25 per pound. That is $11 higher on the week, so bucking the trend. And zinc edges lower at $1.51 per pound. That is a penny lower on the week, but again, consolidating at elevated levels, which I think is what we could say for most of the metals markets. So although on the week we are lower, sometimes significantly, if you zoom out just a little bit, it seems to be a consolidation at higher levels. And those are your metal prices. Coming up, I'm very pleased to welcome back to the program Cam Currie, head of Currie Metals Mining Group, part of Canaccord Genuity. We discuss the precious metals markets, the big drawdown that just happened, where we are in this market, and what Cam is thinking in terms of opportunity in this rip-roaring bull market in the precious metals, as well as the industrial metals. So a wonderful interview with Cam Currie. I hope you enjoy it, and I will see you on the other side. Join us today. I'm very pleased to welcome back to the Northern Miner Podcast, Cam Currie, head of Currie Metals Mining Group, part of Canaccord Genuity. Cam, welcome back to the show.
Thank you once again for having me, Adrian.
It's a delight to have you, Cam. A lot of what we've been discussing here in the few years that we've been talking has come to pass. So congratulations on that. Here we are. The gold thesis is playing out, as well as the silver thesis. How are things? How's business these days?
Well, needless to say, it's been a phenomenal year. And what I find really interesting is how, as you know, when you started interviewing me 3 years ago, I talked about this autocracy versus democracies, debt, fiat currencies, US dollar. And now the adoption of the worries of that is coming into the gold market. I hear it all the time from people. Finally, gold's moved. Well, No, it's been moving up since 2015. And central banks have been making very tectonic moves towards gold as a reserve currency. And yet, just in the last couple of months, that narrative has come into the Western world. And that's why, for example, the last couple of days, we just had these price spikes in gold going to 5,500, silver to 115, because the speculative wake up in the Western world overshot these things. So now we have this step down the last couple of days and people are going, oh my gosh, these things are coming off so hard. Well, reality is we went from 3,000 to 5,500 and we're a new price discovery. Nothing's changed in our thesis. If anything, the arena has just woken up to pay attention to what we are all about in terms of the precious metals.
It's almost like the gold bug narrative, so to speak, to speak semi-pejoratively, has gone mainstream to a certain degree. Some people look at silver as the latest kind of Reddit, GameStop, craze. Probably is in some respects. Okay, so the thesis still stands then, and nevertheless it is, despite the drawdown, it's still pricey. So how are you thinking of this market and your assessment? Were they markets that simply got ahead of themselves?
Well, I would say they're almost catching up to the reality more than anything else. And the pricing, some of the equities overshot themselves, no question about it. But, you know, again, going back to it, you have to understand that this, and I keep on saying this before, the tectonic shift is well underway. I've always talked about the autocracies versus democracies. You look at Xi talking about a global renminbi as a reserve currency, and the BRICS nations. There was rumors a year ago that BRICS were going to create another alternate currency, right? Well, they have been, and what that currency is gold. And in essence, the BRICS nations and the non-G7 countries are adopting what I would call a gold reserve currency status. And David Tate, in an interview, he's president of World Gold Council, made comment that China has set up 34 swap lines with major trading partners, and they're building, as we speak, the largest vault in Hong Kong. And they are big, big buyers of gold. The BRICS nations were big, big buyers of gold, and they are trading with gold as a reserve currency. For example, when India buys oil from Russia, they're avoiding the US dollar and they're doing it through swap lines, and gold is the collateral. So gold is the reserve currency. And I mentioned in a couple of interviews before that gold surpassed the euro as a holding. Now gold has surpassed US dollar treasury holdings. And yet you get some people, looking at gold as, a speculative bubble. Reality is central banks are realigning the reserve base to a tangible currency. Outside of fiat currencies, which I've argued for a long time, are severely impaired with significant amounts of debt and printing presses.
It's interesting you mentioned China. I mean, there is a sense, I wonder what your take on it is, that China is increasingly playing a more influential role on the price of, say, precious metals, or even metals in general. And it seems like they actually want to play a bigger role in the pricing when you look at these articles, like the one you mentioned on, this head-turning article on Xi wanting the renminbi to be a reserve currency. Put it this way, how much of this run-up do you attribute to China and, China's influence in the market, if you can quantify that or however you would assess that?
Well, price discovery, I've been asked many, many times. I remember I was laughed at when gold was 1,600 about gold 2000. And you'll never get me saying what price point I think gold is going to, but gold as a reserve currency is the tectonic shift that's underway. So China's ownership of gold, they've been big, big buyers of gold. And, I want to take the listeners back to central banks really started buying gold after the financial crisis. And a lot of people think it was just after Russia invaded Ukraine, the seizing of Russian assets. Therefore, they wanted to trade outside something that could be seized by the US government. Reality is, when the financial crisis hit and the US bailed out their financial institutions, they sent a message to the world that when, the shit hit the fan, so to speak, they were going to protect their banking system. And so that's when central banks really started going, okay, US dollar, we need an alternative to the US dollar because, they will look after themselves first. And so that's when the central banks really started buying gold. And of course, when the Ukraine invasion took place, that's when these countries started buying more gold because they didn't want to have their fiat currencies, taken from them, so to speak. Like, for example, India, as I said before, buying oil from Russia, And now Modi, just being in Europe last week, signing a free trade agreement. All these moves are moves of trading around the US dollar. So Xi's moved towards suggesting they want to have the reserve currency. Who knows actually how much gold they actually have? The other thing too that people have to understand, at the end of December, China announced that they're no longer exporting silver. And that to me is very, very significant because one, they'd want all the silver internally, but it's also a message to the world that they're no longer going to be exporting critical minerals. And that's of grave concern, because they control the markets and copper markets, refining markets, and that. So they have a greater influence on price. You asked about their influence on price. They control the price market in gold more so than the Western world. No question about it.
It's so interesting. Like the BRICS actually control quite a bit when you actually take a step back of the commodities markets. And so just circling back to what you're saying about these different gold vaults, so to speak, that China has set out. So as far as your understanding, so these are kind of spread out with their trading partners, and then these become, in theory, a means of settlement, so to speak. So if there's some sort of difference in
They
the
settle in
trade,
gold, yes.
they settle in gold, and then it's not all based out of some central location in China, but we have all of these areas. And so, in practical terms, gold does start to become a reserve currency, maybe not the or only reserve currency, but it definitely becomes a reserve currency.
Well, no, it's past that. It's the second largest reserve currency in the world, period. And yet I heard a Fed governor on CNBC last week asked about the gold market. And he said, well, it's a small market and it's not really telling us anything. And this is somebody on the Fed board. I'm going, okay, what planet do you live on? I mean, and this is what I mean about the G7 countries. And again, I'll just touch upon that because it's really important. And I've talked about it many times in the past with you, about the debt levels of the world. I mean, global debt is $300 trillion. Okay. And then you look at the G7 countries and look at how indebted, US $37 trillion. Canada, I'm not sure what ours are, but you look at England, Germany, France, Japan, and I just want to draw something that's very, very important. Japan's used to have negative interest rates, and the carry trade off the negative yen was a big, big leverage to US investments. Now you fast forward to today, the short-term rates in Japan are 0.75%, and yet the 30-year bond rate is now 4%. So their long rates have gone up exponentially. I would suggest that they're having some problems in their bond market. And Japan, out of all the countries of the G7, is the largest debtor on a GDP basis. Yet they have a controlled system because it's inter-owned. But that bond market making this move is of concern because, by the way, the new generation of Japanese are big, big buyers of gold because they're seeing inflation for the first time in their country, but they're also looking at this debt situation and they're looking at alternate assets. So they have become very big buyers of gold. But here's the thing. Japan has greater debt on a GDP basis. They're also the largest owner of US treasuries. So if they have to defend their bond market, what are they going to sell? And yet, just listening to an interview with Warsh, who's going to be the new Fed chairman, one of the things he talks about in an interview a couple of years ago was that the Fed balance sheet is just too big. Well, it's $7 trillion, and they're on the bid on all these auctions. How do you unwind that balance sheet? And you have someone like Japan having to sell treasuries, and you have to refinance $7 trillion of treasuries this year. You know what I mean? Like, this is why central banks from around the world are saying, here's the fiat currency of the US dollar back because it's impaired by all this debt and by a printing press that could turn on any second. We want the real currency of the world back, which is a tangible reserve currency of gold. And, we came off the gold standard with Nixon, and that unleashed printing presses and debt levels. Now we're in this situation, and the G7 countries are laden with this, and the BRICS nations and, Xi and that are looking and going, we're going to go back to a gold standard. And that's what they're doing. And that's what they're going to back their renminbi with if he's successful in creating a reserve currency status, because he needs that backing of gold. And just to finish off, gold's appreciation in value serves them well because it creates greater collateral value, right? So it's not like they don't like it going up. So that's where we are. Gold is a reserve currency. The Western world hasn't looked at it like that way for a long time because the US dollar has been. 25 years ago, 64% of trade was US dollar based. Now it's 42%.
It's funny. You look at the dollar and you mentioned the debts. That's a huge issue, of course, but it's not only the debts, it's the sanctions. It's kind of
Mhm.
like a double-pronged issue that the dollar has. It's not fighting one war, it's fighting a credibility war, one could argue, with the sanctions. And there's a different kind of credibility war that it's facing with the debts. And then we look at the charts. I mean, you look at the charts of the dollar and it looks like it's breaking support, right? And so it doesn't look too good. So we've seen a lot of the metals participate here. Of course, you've mentioned in the past that you like the precious metals. They've run up. How are you feeling about the other metals, which, depending on the metal, have also run up? I mean, we see copper has run up, it's at records, but to a certain degree on a pullback still feels kind of reasonable, doesn't it?
Yeah, I mean, I've been in the recession camp, and that's hasn't happened yet because again, we have asset appreciation continuing on, which creating wealth effect. You have greater disparity between have and have-nots. But in the copper side, I mean, supply is a big issue there, and refining is a big issue there. I mean, Robert Friedland, he talks about, the problems with the critical minerals in copper because there's no way we can become self-sufficient on copper. I mean, and copper's also become an AI and data storage situation. Listen to Chris Wright, who's Department of Energy in the United States. He was talking about the US grid, and he was saying if we don't increase the grid and the power by 2030, he said rolling brownouts will increase 100-fold. So think about that. Now you've got these data storage and AI centers and that, all of a sudden you have rolling brownouts. So copper, I mean, the demand for copper and the projects coming on, I mean, these things take a long, long time to come on and they're very capital intensive. And, copper is a supply side issue. Recently lithium was left for dead here a year ago. And I actually became a very big buyer of some of the lithium names because, you know, data storage and AI centers need battery storage, and that's lithium. And so critical minerals are very, very integral to the homeland security and defense of America. And I hate to say it, but this wokeism and anti in our own backyard has now left the Western world with their pants down because they just can't turn these things on. They take years to be permitted and built. And China, meanwhile, has been advancing their power grids and their dams, solar systems that they've been building out because they're looking at the long plan, right? And so they have much greater control over the metals. And it is concerning. It should be concerning.
You've done quite well in the precious metals. So as you perhaps take profits here and
Well,
there,
hold on. I have to touch upon that. Okay. So,
sure.
gold in the third quarter of last year, gold was 31.50. Ending December 31st, it was 38.50. So all of a sudden, this is average prices for the senior intermediate producers. Now we fast forward, and I'm not going to throw the 5,400 that we just touched out. Let's just say 4,500 here. Okay. So you go from 31.50 to 38 to 4,500. The listeners have to understand that the differential in price goes right to the bottom line. Okay. These gold companies are making so much money. Most of them are all debt free. My senior gold analyst was telling me the seniors that he covers at $4,800 gold, they're going to throw out $28 billion in free cash flow this year. So what's going to happen when Main Street America sees these gold companies that are debt free, buying back stock, increasing dividends, trading at 12, 14 times PE multiple? We haven't even seen a wave of that buy side come in. Two of the funds I know in the gold space, a month ago, 3 weeks ago, they were getting redemptions because the stocks have run up so much. They're getting redemptions. We haven't even seen Main Street come in. There's only like 10 seniors, 14 intermediates. Wait till the stroke of the pen of these ETFs start coming in from the United States to buy these gold equities, given their fundamentals. So long term, this is a great buying opportunity. I'm sitting right now, I'm just seeing what price action happens here in the next few days, but some of these stocks are just so cheap on a fundamental basis because they're in such great financial shape. And yet you look at companies like Oracle, they've taken on this debt. The stock's gone from 360 down to 165. I'd love to see the debate between Frank Giustra and Michael Saylor with Bitcoin versus gold now, with MicroStrategy trading at $138 a share, down from 450. I mean, the fundamentals of the gold space are going to attract a lot more money flows. I'd say we're early with the adoption of U.S. investors coming into our space.
It's funny you mentioned that. I recently saw a post that gold has actually performed better than Bitcoin since 2021. So kind of interesting. And I guess you anticipated my question somewhat in terms of What do you do with the profits? What are you looking at now? Is it the gold stocks? Is it silver stocks? I mean, I assume they've still had quite a run. Is this a buying opportunity with the drawdown? Are you looking at other places, maybe healthcare, who knows what? Where do you put the profits, Cam?
I'm still very much of the opinion we just entered the second half of this game. I look at my companies, I look at my dividends right now, I look at where they're going to be 2 years from now. And I mean, already the dividends my clients get are significant, but I think you got to look at where price action was 31.50 to 38.50, now 48. You start looking at, let's say, 5,000. You see JP Morgan, Bank of America coming out with $8,500 target price, Morgan Stanley coming out with a 60, 20, 20, 60 equity, 20 bonds, 20 gold, and yet half of 1% ownership in US. Like I said, you've got to stay long this. I mean, we're going to see some volatility, no question about it. But what I am looking at, I mean, like I said to you, I'm looking at lithium. I think lithium story, I think, is going to resurrect itself because China controls 90% of lithium. US only produces 4,000 tons a year domestically on a 1.5 million ton market. They need to have domestic supply. So there's an arena there. Copper story, I mean, listen, I love copper long term. I'm still trying to figure out this financial situation. I still think we have an economic slowdown underway. I think the market and the economy are disconnected. And oil and gas, I'm starting to do some research on the oil and gas side. I mean, when COVID hit, the banks really bent the oil companies over. So a lot of them just basically became very financially responsible. And so I've been talking to our Calgary guys on a regular basis because in a lot of ways, very underowned. Nobody's paying attention. They're almost like where we were in the precious metals 3 years ago. So I'm just starting to look at that. But my major theme hasn't changed. I think that this tectonic shift as gold as a reserve currency is still early. There was a recent price discovery article I read from Van Eck. Van Eck has many, many ETFs in the United States. So to go back a year and a half ago when gold was sub 2,000 and Bitcoin was the craze, he made a quote that Bitcoin is the new digital gold. Well, I sent that off to David Tate, who's president of World Gold Council, and Randy Smallwood at the time, who was chairman of World Gold Council, because I know they're coming out with a digital gold product, and it's working through the system, and gold will have a digital platform. But my point being is that was 2 years ago. A recent article I read from Van Eck is price discovery of gold if gold supplants the US dollar as a reserve currency. And to remind you, gold surpassed the euro in reserve currency holdings. It's now surpassed the treasury as reserve currency holding. The US dollar as a trade currency has gone from 64% to 42%. China, Japan, the BRICS nations continue to buy gold and trade with gold as collateral. So they are looking at it as a reserve currency. So I would encourage people to seek out that article because some of the price discovery on gold prices, given that suggestion, suggests gold is going to move significantly higher than where it is right now. But I'm not one to put a price on gold.
Yeah, it's so interesting you mentioned that. I remember us discussing, maybe maybe a year and a half ago, how great the metals looked because they were both defensive in the sense that they were real things and they were beaten up a lot of at least the industrial metals. And it was defensive, but it was also offensive. It was a great investment, so to speak. Unfortunately, now it's harder, right? Because we've seen these big run-ups. Now, in terms of the exploration stocks, what is your sense of exploration, gold and silver exploration? Have they run too far? Is there any interest there? Is it too early? Is it too late?
Well, again, not all exploration companies are equal. I was at Beaver Creek Mining Conference a year and a half ago, and there was probably 20, 30 companies that couldn't afford the entrance to come to it, but were there because their stocks were at 10 cents left for dead, right? Now, in the last few months, a number of these stocks have bubbled up here because, again, people are looking for, a lot of people feel they missed, so they're chasing some of these cheap micro caps. And so I don't play in that space, but what I am doing right now is I've taken some positions in some companies that have advanced exploration plays that are going to drill aggressive programs this year. Quite honestly, I've never seen the setup like this before where there's an absence of projects coming down the pipeline because there was no money going to the ground for a long period of time. There was no ability to raise capital a year and a half ago. All of a sudden, this light bulb goes off, and some of these great companies have now raised $30-40 million, and now they're going to drill 30, 40, 50,000 meter drill programs. We're going to see some of these companies be very successful. And you're going to see in this season a stock go from $1 to $10. all of a sudden people go, oh, you can make a lot of money in the exploration cycle because we were absent of exploration for a long period of time. So I'm looking downscale, but I'm also staying with my core positions because they're just fundamentally of great value going forward. But I'm also looking for those discoveries. I mean, there's a number of these companies out here that have had great drilling success and have a resource. And I typically like to have a resource base. I like to have a banking asset underneath me that has exploration upside. And we're going to have probably one of the best exploration years in years because it was absent for a couple of years. And there's a lot of people with eyes now on the sector who are going to go, oh my gosh, look at that. And you get companies like Snowline in the Yukon that now trades at $20 a share. Well, there's companies in the Yukon that are going to be drilling, and all of a sudden they have a great success. There's, okay, could that be another Snowline? So it's like a magnet sucking it up. And we're going to see some very interesting discoveries this season. No questions. There's too many drill rigs turning.
How are you seeing, say, Canada as a jurisdiction? I'm kind of curious, like, are you focused on Canada or is it more South America and Canada? How are you looking at, say, jurisdiction and how is Canada doing?
Well, all part of Canada is not created equal. I went up to the Yukon in November to a mining conference, and Pierre Lassonde was keynote speaker, and one of his companies bought the old coffee deposit from the old Canaccord from Newmont. And he gave a great keynote speech, and it basically said that it's time for the Yukon to grow up. And he made reference to the point that resource-wise, I think there's only 38,000 people in the Yukon, but resource-wise, they're so pregnant with resource opportunity, it's akin to Saudi Arabia discovering oil. It could be transformational to the region. And so I specifically went up and had dinner with the new Premier Currie Dixon and Pierre. It just smells like there's great opportunity here, but has to open up in terms of permitting, Indigenous support. Of course, they had a black eye with the Victoria Gold Eagle Project problem, but the opportunity is significant. And that's just, one region. There's certain jurisdictions I won't go to, but I mean, we've been very big supporters of Montage, one of the Lundin group of companies. Martino's done an unbelievable job in the last 18 months, and it's been a great success for us. It was only 18 months ago they broke down, and they're going to be in production producing 350,000 ounces of gold here in the next 8 months with a bolt-on of a second project going to 500,000. You just cannot move that quickly in North America.
Where is that?
That's in Cote d'Ivoire. Yeah, so I mean, and West Africa has a discount, yet you can get things done there. So some jurisdictions I just don't go to. I mean, it's just, but there's a real finite amount of companies. And here's the other thing too, Adrian. In the last cycle, I was involved with 8 of my companies were taken over by mid-tiers and seniors. Well, with these senior gold companies, intermediates trading where they are and throwing out significant cash flow debt-free, the shareholders would be asking, okay, what are you doing for replacement? What are you doing for growth? And buying assets that are coming down the pipeline. I mean, there's very few assets that are coming down that can be built in the next 3-4 years. And so there's a scarcity of assets. That's going to put some tension in the boardrooms, and we're going to see greater M&A, but there's very few assets. So that fosters in a significant exploration market with a significant amount of people looking at these discoveries. And we've been starved of narrative and attention and capital for a long period of time because it's going into other sectors. All of a sudden there's this wake up call and everyone's going, oh, there's this bubble in gold. Well, no, it's just waking up.
Okay, excellent. And so as we start to wrap up here, Cam, just big picture as we zoom out a little bit. I mean, what is your sense of how, say, the West is doing in terms of its attempt to reshore its supply chains and to, secure critical minerals, as you were mentioning China earlier on, its dominance, particularly in processing, the real bottleneck in most cases for these metals. How is the West doing in your assessment? Do you have a general sense?
Well, I'll put it in very simple perspective, okay? It's not West, but it's a G7 country. Japan in 2011 made a concerted effort back then to try to become less dependent upon China for critical minerals, okay? Fast forward, late last year, Japan announced their increase in their military by 50%, and yet 60% of the critical minerals still comes out of China. So that was 2011, 2026, still 60%. So they made a concerted effort, but reality is China has been at this for a long period of time. You just can't turn a switch. And I think that's one thing investors just don't really understand. I think they're going to get to understand this, that, even if you have a copper asset in the United States, you've got to get the permitting done. You've got to get the capital raised. You've got to build it. And, it takes a long period of time. So we got to catch up, but it can't happen quickly. And that's a concern. And so when China announces they're no longer exporting silver, they're also sending a message to the world that they're no longer going to be exporting critical minerals. Well, those critical minerals are integral to homeland security, microchips, sensors. I look at fireweed in the Yukon, tungsten, and it's one of the best deposits in the Western Hemisphere. And it may be in production 5-7 years from now. If it was in China, it would be under construction right now. So we have a lot of political and social transformation required to catch up. And we're going to have to, because we can't depend upon a supply of an adversary.
Finally, just on these investments we're seeing, say, by the US in these, companies, I think like fireweed, if I'm not mistaken.
Yeah.
You take placements or you invest in these companies. I mean, how does that make you feel? Like, are you excited because, this is going to grow the stock? Are you concerned because is this going to be some sort of government intervention that maybe is going to hurt the business? What is your sense of these investments by government?
Well, in the case of fireweed, I'm not concerned because it's run by the Lundin Group of companies, and they're serial success builders over time. It's just a matter of the region. How's the Yukon going to, is Ross River going to turn very positive? Are they going to get the ESG advancements and the permitting advancements so they can build it? And we need political, support in that respect. And, again, it just has to be, if people realize and communities realize the economic benefits, most people think of gold as or mining as a dirty word and everything else. And I'll make one comment. I was at the Mining Hall of Fame, and Don Lindsay and Hartwell and Catherine McLeod and Morrison were doctoring in the Mining Hall of Fame. And one of the things that really stood out in my mind, there's about 500 people in the room. And, for years, as the mining industry, we've always been looked at, especially when we had this woke movement 3-4 years ago, as if we were dirty business people because of what we do to the environment. And there's a real sense in the room that there was a real pride in what we're doing because the world's finally recognizing that without us, the world doesn't function. I mean, your phone has 62 minerals in it. Without us, that doesn't work. AI doesn't work. Your lights don't work. This interview wouldn't be happening. And there was a real transformational recognition that we are the foundation of this economic prosperity that we all live in. And it was actually a really interesting feeling. No one was talking about how much money our clients and that are making. They just kind of felt a sense that finally we're getting recognized that we're actually good contributors. I mean, sure, you need proper stewardship of ESG and that, and Western companies are very, very good because the rules and regulations are so strict. But I think, it's refreshing to see. And so having governments and having the narrative turning positive is going to draw a lot more attention into our arena. And just short term, recently here, we had too much. It's like Niagara Falls going through a funnel for a short period of time there. Now we have to get some new price discovery here, but the trend hasn't changed and the opportunity is there for investors.
It's funny. I was talking to the new president or relatively new president of AMEBC, Todd Stone, and he was calling the mining industry heroes. And I thought, what a change this has been since, the dark days of, as you said, 2015 with tech at $3 a share there. Excellent. Any final thoughts as we close here, Cam?
Like I said, we've had this overshoot and, we had a couple of mining conferences in Vancouver last week, and you can just see people that were down in Beaver Creek a year and a half ago in despair, and all of a sudden everyone's elated. So you just know that there's a little bit too much fibrillation right now. And for investors, you have to stay with the quality. You're going to hear about story after story. There's so much more promotional people coming into our space because they think they can make quick money. And what you read and what you see on your soul-searching investment thesis, you need to find people that really know what they're doing, because the mining business can be very, very tough. But for those that are very good stewards of it, it's very rewarding. And you just have to be careful in this environment and make sure you're investing in the real solid investment opportunities.
Cam Currie, head of Currie Metals Mining Group, part of Canaccord Genuity. Thank you for joining us and sharing all of your insights and perspectives on this week's Northern Miner podcast.
Thank you, Adrian.
Thank you once again to Cam Currie for appearing on this week's episode, and thank you once again to everybody at the Vancouver Resource Investment Conference and AME Roundup for the wonderful feedback on the show. It was much appreciated. And thank you, dear listener, for continuing to support this program. If you want to help out the podcast, please leave us a review in the Apple Podcast directory. Share it with your friends. And until next week, take care.